Good afternoon. Welcome to the Weekly Livestock Market Update. I'm Brownfield anchor reporter Megan Grosvenor. With us is University of Missouri Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
A couple of big reports for us to get into this week, but first, let's start and recap what happened this week in the markets.
Yeah, if we start on the cattle side this week, we saw cash cattle markets up $1.25 this week, while feeder cattle were steady to $6 higher this week. On the futures side, we did see gains in futures markets as well, as the live cattle December futures contract was up nearly $1.75, and the November feeder cattle futures contract was up a little more than $1. When you look at the choice box beef price this week, we were up $5.81. It was a good week this week whenever we looked at those choice box beef prices. We really had strength across the board, but led by ribs and loins, giving us that push in box beef prices. On the pork side of the equation, we saw cash barrel and gilt prices that were a little more than $2 a hundredweight lower this week. Yet when we looked at futures markets, a lot of strength in those lean hog contracts, with the December contract up more than $6 this week. The pork cutout value was down $1.89. We really saw weakness across the board when we looked at all of the cuts that make up that pork cutout value.
Scott, let's talk a little bit more in depth, specifically about the pork markets. We talked about this strength, and we've seen such big moves in a lot of days on the lean hog side of things, but we're seeing moves in opposite directions on the cash side. Are we seeing this, or are we anticipating this large market supply, or this big supply of pork, and is that what's going on the cash side of things?
Yeah, I think when you look at where cash markets are, for sure, I think what's guiding them right now are extremely large slaughter runs that we have, and it really keeps those barrel and gilt prices with a lot more pressure, downside pressure on them than what we're seeing happening on the futures side.
And then we're seeing, what is it, the speculation then from this whole African swine fever. We saw more outbreaks in China this week. We saw the Chinese tourists get picked up in Japan with the sausage that tested positive for African swine fever. So is that uncertainty giving strength and providing some strength on the lean hog side of things?
It would sure seem like it, and I do think that is the number one reason why we've seen such strength in those futures contracts. You and I talk a lot about risk management. Here's a case where maybe some risk management that doesn't curtail that upside potential if we continue to see African swine fever unfold might not be a bad strategy. I guess there I'm looking at the opportunity to use options to maybe help protect against if African swine fever does not continue to grow and we don't see a lot of additional opportunity. I have a hunch that we'll see those markets move lower again. So using some risk management through there, just given the strength that we've seen, that again doesn't limit the upside, because we know if we have a major ASF outbreak or it continues to unfold like it has been, we likely could see some real benefit here in the U.S. and ultimately on U.S. hog prices.
And I think one thing to remember is the fact that China has half of the world's pork supply and the largest consumers as well. So that definitely is a market that we continue to keep our eyes on.
Yeah, and even if we don't get a chance to get in that market directly, I still think we pick up markets that others like the European Union would leave as they try to fill some of that Chinese market. So it's a win for us in this situation. Now, it should remind us as well of we have to be really careful about our own disease situations here in the United States. A disease outbreak that cuts trade off for us to a number of important markets could be equally devastating to where our markets go. So we have to remain vigilant in terms of that disease side here in the United States as well.
Are we also potentially seeing maybe some support or some speculation for support as the USMCA deal, that new NAFTA deal, makes its way? I know Senator McConnell talked about that it's not going to be happening, or it won't happen until 2019. But on those deferred contracts, does that give us a little added support there too?
I do believe it does, and I think it's important to remind ourselves that just given it's going to take a little bit for all these countries to potentially ratify the new NAFTA agreement that we have in place, but getting tariffs off of hams going to Mexico is nothing but positive to those deferred contracts, I think, as we look into the latter part of 2019. So I do think that we are seeing that trade side being helpful as well.
Let's talk a little cold storage as we take a look at those numbers. How are we doing with the growth of meat supplies and freezers around the country?
Yeah, so I guess a little bit of both here in terms of what we see happening out of that cold storage report. Number one, I think in many cases we came in below pre-report midpoint estimates when you look at both beef and pork. Yet when you kind of look at the numbers, beef in freezers and at the end of September was right at 509 million pounds. That was about 2.5% higher than where we were a year ago. On the pork side, I think there was a lot of concerns about what kind of pork freezer load we would see here at the end of September, but it was actually 4.8% smaller than a year ago. And you look at some of the cuts there on the pork side, hams were down 7.5% relative to a year ago. Some concern about what happens to ham supplies when you have that Mexican market with larger tariffs. Now, again, when you look at overall meat supplies, we were higher again in September, but the rate of growth slowed a lot. And I think that's some positive news out of that cold storage report. Chickens, on the other hand, I said beyond burdensome when we talk about being over 17% higher in chicken cold storage than we were a year ago at this time. We've just seen constant growth as we've gone through 2018 in terms of chicken parts in freezers.
So I want to get into these individually, more so focusing a little bit. Let's start first on the pork side of things. We've seen a decline. Are we surprised to see that number for September drop, especially as we're not seeing as much pork go into some of our larger trading partners like Mexico, and we saw a big decline in hams?
Yeah, so I'll take these a little bit at a time. I would say number one, when you look at September in particular, so we had one less slaughter day this year than we had a year ago. I think that can have some effect in terms of those freezer stocks at the end of the month. But as well, I don't want to forget on the pork side that we had the hurricane going through that really cut production in North Carolina for several days running. I think that had a lot to do with the pull down in cold storage on the pork side that we saw. So I won't be surprised for us to see some bounce back now that we're talking about running near record levels of slaughter here with some of the recent data that we have.
That was my next question. If the pendulum would swing back, then maybe an overcorrect for October, because those hog weights this month have been rather large, and we continue to see another growth again, or another increase again this week.
Yeah, the end of October, I think, it's just going to be interesting now that we've kind of seen the supply side get back to what is more normal or what's more anticipated. But we'll wait and see until we get there. But let's hope we don't build a lot up. And I know you were asking about ham as well. And I go, for me, that's really good news. So despite what's a Mexican market that has 25% tariff imposed for us, we've seen some pretty good ham movement, I think. And I think that's helped keep those freezer supplies of hams at lower levels.
I want to talk a little bit about the chicken supplies. You said beyond burdensome. I was in North Carolina for a year, and everywhere I turned, there were broiler houses going up left and right. Now, will we see some correction, maybe to see growth on the broiler side and the poultry industry pull back a little bit because we're seeing such large supplies and these supplies continue to grow?
Yeah, I think we're finally seeing a little bit of data out of the chicken industry that would suggest we are going to see some supply slowdown occurring there. If you look at some of the chick placement data that we have today, as well as the broiler hatching flock levels that we see, I think all those suggest to me that we're going to get some supply reduction starting to unfold here, and that should be helpful. I will say it's amazing what are near historical low levels of prices when you think of things like chicken breast prices, yet we don't seem to see a lot of push on the demand side as a result of those lower prices. So demand's not been quite as helpful to the chicken side as maybe some of the other meats.
Does that mean we're going to see a lot more chicken product featuring on the retail side of things potentially to get moving that product through?
We very well may see a lot more featuring trying to push those products. We have to move some of that product at some point. 17% more chicken in freezers won't last for forever. There's no way I think we can continue that kind of double-digit growth, and we just have to start to move that product. And maybe the supply side will help us here the most, but it's just amazing that we haven't seen a larger increase in consumption despite what's already been some fairly low prices.
It's just too bad all of the chicken doesn't taste like a chicken wing.
If they could just intertwine some bacon in it for you, Megan, I think that would be much more helpful.
That is always flavor, Scott. I don't care what you're doing with it. Little livestock slaughter today. As we take a look at those numbers, are we surprised to see production levels for Q3 of this year?
Yeah, so a little bit actually, and I think this is something we want to start to focus on. Although I always say one point does not start a trend. If you look at overall beef, pork, and chicken production that we got for the third quarter of 2018, it's up 2.3% relative to a year ago. That's the slowest quarterly growth since Q4 of 14. So we really slowed production. When you start looking at some of the individuals, I go, well, let's go to pork. All right, so hurricane influence certainly comes into play there. We are only up 1.2%. If you look at beef production, though, only up 1.3%. That's the slowest growth since Q3 of 2015. If you look at chicken, though, we got the other side of this equation still. So chicken production up 3.6%, second fastest quarterly growth since Q3 of 2015. It's quite a mixed bag, but that 2.3 overall growth in meat production reminds me that we've slowed the supply side, and in fact, we've seen ourselves pulling back in terms of what we expect 2018 annual production of those meats to do at the end of the year. So the supply side probably has been a little helpful to the price outlook as we look at Q3 of this year.
As we get into beef and pork specifically, does that maybe indicate we're also slowing our production and our growth rate in those industries?
Yeah, so for beef, all right, so we talked cattle on feed last week, and we talked about the lower placements that we saw out of that report, the fact that placements fell outside the range of pre-report estimates. One could combine these things together and say we are seeing this slowdown in beef production. We talked about a lot more heifers being making up the cattle on feed inventory numbers. All those things to me start to give us that indication that the major growth has been slowing. I don't want us to forget, we go back to Q3 of 2017 and we were up over 4% in beef production. So the fact we've slowed that to 1.3 makes a difference. On the pork side, I think maybe that's a little different story. And again, just the hurricane situation, I think, slowed production, given where we're at today with both weights going up and record or near record slaughter, I should say. I have a hunch that we're not done seeing growth in pork production, and I'm not giving up that we won't see some more growth in beef production as well. But we're sure seeing a lot more signs that we might be coming to the end of that major growth period.
All right, Scott. We talk about risk management all the time, and in all seriousness, we do. But I have a little a story that I was reading online that was talking about how more city folks are wanting to come out to the farm and experience the ag experience just in general. And there's this story talking about cow cuddling for 90 minutes for $300 for that time period. I'm thinking that that's a pretty good side hustle for folks that are looking to manage risk and add a little value add to their farm. Is that something that we can look into?
Well, so certainly there seems to be a lot of folks that don't understand production agriculture anymore, and they enjoy the opportunity to get closer, despite that many of us might not cuddle with those cows all that often. But I will say, it just reminds me all the time of, I often say, if you want to help your industry, it's all about giving consumers what they want. If I can do that kind of cow cuddling and make good money at it, consumers want it. Who am I to say whether they should not pay a lot for it? So maybe that reminds us as well, as we think about the kinds of meat products we put in front of consumers, making sure we hit what they want is important. Maybe that has a little bit of the why is chicken doing what it's doing today versus beef versus pork, meeting consumers' demands, and a very different consumer today than what we might think of historically, as so many of them just have lost any connection to production ag.
I think it's a great thing to do with our bottle caps. I'm going to have to run it by my dad and see what he thinks.
We'll see the Grubner cuddling business, I'm sure, flourish in the next few years.
Hey, whatever we need to do to go through these times where prices are, make it through the times where the prices are a little bit lower.
It's not a risk management tool I thought of myself, so I'm glad to see you bring it up today.
Scott, all right, in all seriousness, as we wrap up today, what are we looking at ahead of for next week's reports?
Yeah, so a couple reports next week. We'll get a restaurant performance index midweek, and then we'll end the week on a jobs report. And I will continue to say getting that jobs report is important. We need the economy to continue to grow, just given what we're doing in terms of meat supplies on the marketplace.
All right, Scott, have a great weekend. We will talk to you next Friday.
You do the same, Megan.
To have our weekly livestock market update delivered to your email box every Saturday morning, visit our website, brownfieldagnews.com. Click subscribe. You can also submit questions and comments there as well. And for market updates twice daily, make sure to check out John Perkins' Market Minute. Have a great weekend. Have a happy Halloween, and we'll talk to you next Friday. I'm Megan Grubner on Brownfield.